Hi, I'm Peter Rose, founder of Longwood Currency Trading. Why are the Forex trading odds 90% against you? Why is that? I mean, we see that statistic a lot, and I want to talk about that in the video today. And I want to show you that it's not as bad as you would think, that there are solutions to that. Toward the end of the video, we'll have some solutions, because I think you need to understand the problem first, because that in itself is a problem. That's for sure. If you're watching my channel regularly, then you note that I'm talking about stuff that's trading related and not Bollinger Bands and fibs and all the rest of the stuff that's out there. Why? Well, first, you have to know what my background is, and I'm not going to go through that now. You can look at the show notes and all that stuff. My physics degree and 40 years in real estate and all that other stuff. But I don't talk about indicators or fundamental analysis or all that other kind of stuff. We're retail traders, and we are not encumbered by needing to know that stuff. We just are not. A bank trader might have to understand fundamental analysis, particularly in the currency market, and a bank trader is going to have to know more. They don't do fundamental analysis. I mean, technical analysis. You ask a bank trader if what the RSI on, they'll just laugh at you. All that is facades. Is it just indicators and stuff that's bad for? It's not. The indicators aren't bad for you. They indicate something, but not what you're being told that they indicate. Do you need them? Well, no, you don't. But the crux of why it's 90% against you, before I get into that, well, how do you know that it's 90% against you? That you're sitting at your desk banging away, and how do you know that you could say it's 90% against you? Many, many, many years ago, one of the larger Forex brokers took 43 million of their client transactions, 25,000 clients, 43 million transactions, and they did an analysis of that data. And what they found was stunning. 90% of the traders lost 90% of their money in 90 days. And the strange thing about that was that of those 90% of traders who lost 90% of their money, 72% of their trades were profitable. Now, the logic of that is beyond comprehension. But the fact is that 90% lost their money. And it isn't just that 90% lost their money, they lost it in 90 days. That's pretty stunning. Well, Peter, what is that reason? I'm glad you asked. It's the education you're consuming. That's what's against you. How could education be against you? Bad education is like a little stone in your shoe. It doesn't seem to hurt until over the long run it becomes debilitating. The folks that are getting involved as retail traders in the currency market, because there's so much opportunity there and there's so much money to be made. Look, if 90% of the traders are losing 90% of their, 90% of their money, then who's making that money? It just doesn't evaporate. There are 10% of the traders out there that are making 90% of the money. There's a lot of money to be made. How do you make that money? By not having crappy education. I mean, it's that simple. But when you're out there looking at the information that's available to you, it's invasive. There's so much information. When you look at my channel at this point in mid-September of 2024, I just published my 440th video, and I've got 50 blog posts. So I've been around for a while. I've been studying the currency markets since 2007, and I consumed that education that was out there because I came out of the 40 years of investment in real estate, and I had to be educated in that market. And when I was looking at buying a building and wondering about something about that building or the tenants or the cash flow or whatever, I could go to other real estate investors and I could say, hey, I've got this problem, what do you think? And the information that I got was a straight scoop. I tried that same approach because that's the educational process, right? You look out at people that know what they're doing, supposedly, and they give you the straight information. Well, not only don't most of the people know what they're doing, they don't give you the straight information because they don't know it. And so they fabricate shit. Well, you know, you got to use these Fibonacci's. You got to use this London Open, engulfing candles, RSI, and confluence with the Bollinger Bands. It's all bullshit. It makes no sense. And the folks that are using that stuff don't understand it. What is a Bollinger Band? Do you know what the standard deviations are in setting up the bands? Do you know that a Bollinger Band is nothing more than moving averages and standard deviations of moving averages? Well, if moving averages past information, what good is the Bollinger Band envelope going to do for you? It just shows what's going on in the past. And who's to say that whether it'll bounce off the top cloud band and retract back downward? What's the probability of that happening? Oh, well, there's a high probability. Well, yeah, but if you get too wrapped up in somebody says there's a high probability, then it should react. Why don't you just learn how to trade? You know, if somebody sits down and they say, I'm going to teach you how to trade, and you don't learn how to trade, then there's a flaw in that person. Because that's as core as you can get, how to trade. And that's the real first problem. You have the education as the over-encompassing reason why the failure rate is so high. Primary to the concept of education is that trading is a skill, and then trading currencies is a skill that the trading is applied against. Trading options is a skill that trading is applied against the options market. Trading is a skill that's applied against real estate. For example, if I'm going to trade real estate, it's going to be a 20-year hold. I held buildings for 20 or 30 years. Well, that's just silly, Peter. Well, what about all these people that are flipping? That's great. You start flipping, you get experienced at it, you flip larger and larger properties, and all of a sudden the economy collapses. You've got 3 properties out there that you're flipping. You've got partners and banks that have financed you. You have no cash flow coming in from those properties, and the market goes south. Nobody has the money to buy them, and they sit there, and it's costing you a couple $100,000 a month in holding costs, and you're still having to pay your work crews to go in and do the work, and you get caught, and there's no way out, and down you go. So there's a time there. If you're trading currencies and it starts to go bad on you, you get out. You're gone. Particularly in the 6 major pairs, if you hit bid ask, boom, you're done. Your order is taken care of because of the immensity of this $6.7 trillion market. So where flipping real estate might not be a really good idea, except for the very, very experienced, day trading in currencies make tremendous sense. Whereas in real estate, you want to hold the properties. Well, I mean, you know, if you're going to hold a property, you got to hold it for at least 5 years. Look, you're going to lose 5% of the value of the property in closing costs when you go to sell it. And that could be, if you're in the heartland of the United States, properties aren't appreciating at 18%. You're lucky to get 5% out of that. On the coasts, you might get 8 or 9% a year, on average, over 20-year periods. So regardless of that, it's going to cost you 5% of the value of that property in order to sell it, and sometimes more, because New buyer might say, oh, well, this is out of code, and this is, you got to fix this, or you got to fix that. That's another $2,000, $3,000, $4,000 that you're going to have to put into it before that buyer is going to pay your price. But that 5% is a year's appreciation on the property. And that 5% of the appreciation of the property as a function of the amount of money that you put down is catastrophic. But in currencies, as a day trader, it'll cost you a pip and a half. You know, $15 on a full lot to flip that account, because that's the VIG, the spread. So if you're only trading for 3 pips, if you're scalping, and you only do that once or twice, you're not going to be really successful scalping. However, if you move the needle out, okay, so short-term real estate isn't as viable, and scalping isn't really part of the equation of trading. It's a whole different thing. You don't say you're trading when you're scalping. You're scalping. Well, I go into that later. If you have a question about that, send me an email. But when you're talking about trading, it's day trading or swing or long-term position trading that you're looking at trading, defining trading against. Trading in real estate, you are including that 3 to 6 month flip. But your risk of ruin is higher in a flipping contest or in a under 4 or 5 year hold than holding for 10 years, or like I did in many cases, 20 years and 30 years. But for example, a 30-year hold, I paid $74,000, for example, for a 4-unit. This is a long time ago, back in the 1970s, late 1970s. $74,000 is pretty equivalent to what you'd have to pay for a 4-unit today. Let's just put it that way. But that $74,000, when I finally sold the building, not only had I made the income from the cash flow from the building and the appreciation as my net return profit against the building, but somebody handed me a check for $600,000. So I had $600,000 at the end of that period, as opposed to you working your job and getting paid $100,000 a year, and then 10 years later, nobody's going to give you $1 million check. Right? You've spent that. So there's a lot of advantages in the real estate market, but you have to be willing to hold for 20 or 30 years. I lost $1 million net worth twice because of economic decay in the real estate market. But because I understand the probabilities and the expectations and all that other sort of stuff, I never lost my assets. I just lost all my net worth. So I was able to come back. I was able to make the $1 million back each time, but it took me 10 years each time to do that. In the currency market, prices they don't necessarily need to come back. If you run a loser a long way, you're going to get clipped. And yet there are people teaching position holding on the currency market. Now, if you look at the reasoning behind the currency market, that's just crazy to hold positions for months, let alone years. The banks do that. Maybe it's a bank trader telling you should hold, because there's a whole different advantage to long-term holding of currencies that the banks would have, whereas not so much for you because of the volatility. The banks have a whole section of traders, and all they do is buy a currency. That's all they do. They warehouse it so that they've got that currency when they need to sell it or when somebody else needs to buy it. That's how supply and demand is controlled by the large institutions. But they're not doing it to clip your ass. They're doing it to make sure they've got money so that they can fulfill their client orders at reasonable prices. And that's why you see the price action act the way that it does. So if you don't understand trading, you're not going to be able to understand supply demand as it applies to the currency market, any more so than you could studying real estate. Yeah, I was a real estate broker. I never used it to sell properties to customers. I wanted to know what the guy on the other side of the desk knew. The same reason I understood mortgage finance. I studied mortgage finance. I got my real estate first mortgage broker's license, second mortgage broker's license, and main arranger of credit, second mortgage broker's license in 2 different states. I understood mortgage financing so that I knew about finance. So it's important when you're doing stuff like real estate that you understand the economics behind what you're doing. But if you're day trading and you're not trying to do it on a monthly basis, but you're flat at the end of the day, why do you have to know any of that stuff? And if you're trying to do indicators on a 5-minute chart, you're crazy. They don't make any sense. You have to be up on the daily chart for any of that stuff to make any sense. Because it's okay to have, well, if you're looking at a moving average, a 21 period moving average, and you're on the daily charts, that's shit that happened a month ago. Why would you need to know what was going on a month ago? Is the same guy that's got his $5 billion order for engine parts, is he still in the market? Is the institutional trader that's pushing his requests around, is that even still there? No. Is there somebody else there to take his place? Yes. But why is there somebody else that's going to take his place within that certain price action range? That's something that you might want to know. But you don't need to know fundamental analysis if you're going to be a day trader. If you're going to be a long-term position trader, you're in the same position as a long-term position trader in the currency market that the flipper is in real estate. There's an anomaly there, but that's the way that it is. Your main problem is to understand trading, not all the nuances of that particular market, because you don't need it, because traders don't need that. If you want to be an investor, you need to know that stuff. If you want to study that stuff, don't be a trader. Because you'll get the rules for trading mixed up with the methodology of the longer term stuff. Well, you can be wrong 6 times in a row from a probabilistic standpoint. If you're a day trader within 300 trades, you're going to be wrong 6 times in a row for sure. Very high probability. But there's a significant enough risk from a probability standpoint that within 100 trades, you're going to hit 6 losers in a row. So you could hit 6 winners in a row too. You get some lucky fool that runs through a minefield and gets to the other side, and he thinks he knows how to run through a minefield. And he's telling you he's going to teach you how to run through the minefield. Is that the guy that you want to trust? That's the problem with the education that you're consuming. So it isn't that you can evaluate whether the education is good or bad because you don't know enough about the topic in order to evaluate the information. I can look at somebody and say, well, that guy doesn't know what he's doing, or that guy knows what he's doing, but he doesn't know how to teach it. Those are the 2 things that you're up against. And then there's the third person who can do the thing and knows how to teach it. Well, no, 10% of the people, I guess, get all this stuff. Well, how did they get that way? Well, 2 ways. They either got the correct information, or they got bloodied up severely enough that they figured it out. That's the case for me. I opened my first large trading account and $45,000. And I lost $40,000 within, I don't know, 4 months. It was quick, 5 months. And that's after trading in a demo account for 4 years, doing computer simulation analysis, because I did currency. I got into the currency market as an academic exercise in 2007, but I didn't start trading in 2012, and that was with a couple of mini accounts, in real-time mini accounts. I lost $1,000 pretty quickly, and okay, I'll reload the account. I think I got this because based on the education that I had. I put another $1,000, or maybe it was 2,000. I don't know what it was. I forget what it was. But anyway, I lost both of those accounts. I thought I needed more education, so I spent 4 more years trying to get more education. I took a $1,000 course. I took a $50 course. I talked to people. I thought I had it. Then I opened a $45,000 account, and I lost $40,000. And I said, this is stupid. I've done all this education. What's the problem? Why did I lose my money? And the conclusion was, it was because of the education that I consumed. I believed that education the same way that I believed the education in the real estate market. But I stepped back from that educational $40,000 loss, right? And in 15 minutes, using my over 30-year career as a software engineer, doing complex business analysis and development, solving problems, I was solving the wrong problem in the currency market. That was my first problem. And the second problem was I was doing the wrong things even if I was solving the right problem. I figured out 3 things, simpler problems to solve. I wrote a rule for each one of those, all in 15 minutes, and I've been using those rules ever since. Why did I lose all the money? It was because of the education that I believed in. How are you, if you don't have a background of how you reasonably solve problems, how are you going to be able to do that? And even if you do have a background in solving problems, I didn't understand that the information that I was getting was flawed. How are you going to be able to do that? It's going to be really difficult for you. I'd like to help you out. If you send me an email and you got a simple question that I can answer, no charge. I'm happy to do that. Most of the time it turns out that when I answer somebody's question, they come back with another question, and I answer that, and they come back with another question. And what's happening is they don't understand how to trade. And I can't teach trading by answering questions. You teach trading by working through the information that's available, pulling out what I call the relevant information, and making that make sense to the person in a course. I mean, you don't learn how to do calculus in school by flipping the pages of a book or listening to some video online, and in 2 weeks you know how to do calculus. You're not going to learn the history of your country by reading a couple of history books or by reading all the history books. You need the teacher there who's read all the history books and has synthesized all this stuff, has picked one that he relates to the best, and that's what he teaches out of, but you're learning from his experience, not from the fucking book. Man, it's your choice. If you're not investing in good education, then it's costing you whatever your profit target goal is. You want to make $30,000 a year, you might make $60,000 a year. It's costing you that much money by not investing the money in order to learn this stuff right. Because trading currencies, I'm just here to tell you, is simple. And it's not what the educational folks are telling you. That's all I can tell you. I hope this has been helpful for you. If you do have any questions, feel free to send me an email. I appreciate you subscribing and leaving comments. I can't help you in a comment, obviously. I can comment on it. But if I do comment on it and you don't get it, or you want more information on that, then the quick way is to send me an email, and we'll be happy to chat with you a little bit about it, okay? All right. The sun is coming up. I'm early in the morning here. The sun's finally coming up. It's warming up a little bit. I'm going to go grab another cup of coffee, and that's the end of my tirade on Forex for the day. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.